Hello everyone, and welcome to the Financial Profit. In today's profit report, we're going to discuss two very interesting futuristic companies, Joby Aviation and Archer. One of our primary objectives at the Financial Profit is to identify crucial forward-looking industries that could considerably outperform the broader market in future years. Moreover, we attempt to identify the top stocks within these sectors that could dominate in the future and may even become monopolistic style companies as we advance. An incredibly lucrative potential segment may be the electric vertical takeoff and landing EVTOL space. Two of the top companies to consider in this segment are Joby Aviation and Archer Aviation. Both companies seem very interesting and appear to have solid growth prospects as well as exceptional earnings potential, especially in the intermediate and longer term. Despite neither stock being particularly cheap here, both company stocks have declined by approximately 33% from their respective recent highs. Due to these constructive pullbacks, I've opened starter positions in both stocks worth about a 1% portfolio allocation in each, Archer and Joby. Now, let's examine the two companies and their stocks. Let's start with Archer Aviation. The company designs and develops EVTOL aircraft and offers related services. It operates in the commercial segment and in defense. Archer also offers an aerial taxi service, which has successfully tested flights in the United Arab Emirates. Archer is also wisely shifting its business model more toward defense, as its EVTOL craft, or just, as I call them, flying electric vehicles, could become a significant component of the U.S. military in the future. The company is also ramping up mass production of its aerial vehicles, emphasizing its selection as the official exclusive air taxi provider for the 2028 LA Olympic Games. Now, I view this stock as an elevated risk-reward potential opportunity. Despite having excellent prospects, Archer has very little revenues so far, and it needs to execute nearly flawlessly as it moves forward. Now, if the company executes well, it could increase revenues by over tenfold year over year next year, potentially growing sales from only roughly about $10 million this year to approximately $140 million in 2026. Moreover, it could increase sales to approximately $500 million in 2027 and to potentially over $1 billion in 2028. Still, the company is very far from being profitable, and it may not see positive earnings per share for 4 or 5 years. Currently, it trades at about 5 times projected 2028 sales and at a projected 2030 price-to-earnings ratio of approximately 15. Therefore, despite having excellent prospects, Archer is relatively expensive here and is an increased risk stock as of today. Now let's shift our attention to Joby Aviation. Joby is a very interesting vertically integrated air mobility company that develops and builds similar EVTOL or electric flying vehicles. The company has an ambitious plan to build an aerial ride-sharing service as well as an app-based platform that will enable consumers to book rides. Joby also has defense potential, as it has a partnership with defense giant L3Harris Technologies, suggesting potential military adoption of its electric flying vehicles in future years. Now, in Joby's recent quarterly announcement, the company highlighted considerable growth prospects. It illustrated advancing certifications and launching operational flights in Dubai. The company is also continuing to expand strategic partnerships. The company is looking at potential $1 billion in aircraft sales in Saudi Arabia, as well as a 100 aircraft joint venture in Japan. The company appears ready for commercialization, which is a very big step forward as we advance. Another good piece of news about Joby is that it could generate considerable revenues relatively soon and may increase sales to about $600 million by 2028. Still, like Archer, Joby is quite far away from being profitable and may not see positive EPS for several more years. Also, I want to highlight that Joby's price recently skyrocketed past the consensus 12-month price target estimates. Therefore, it appears that Joby became considerably overbought recently, or perhaps the analysts are far behind the curve, but likelier it's a combination of the two factors, and it's really positive that Joby pulled back by about 33% recently, putting it in my $14 to $15 buy-in range where I actually pulled the trigger on the stock. So I'm pretty happy about that. Joby's price has roughly quadrupled since the April bottom, and the company has a market cap, or had a market cap, of about $15 billion recently. And even at this price point, its market cap is around $12 billion here today. So quite significant, again, highlighting that elevated risk reward potential in the stock. Nonetheless, in my view, the price targets should get lifted. So despite surging to over $20 recently, Joby's RSI made a lower high, illustrating a negative technical RSI divergence. And despite the strong momentum and solid prospects, we did witness a solid pullback to about the $14 level recently where I pulled the trigger. And also, going forward, it's not out of the question that Joby won't pull back by another 10 to 20% if the pullback persists. And I'm going to increase my position at around $12. That's my next buy-in entry point. So if it goes to 12, I'm going to add another percent to my portfolio because I view Joby and Archer both as these longer-term, high-quality electric flying vehicle stocks that could do extraordinarily well in the future. So the bottom line is that both companies, Joby and Archer, could be solid intermediate and long-term investments, and they could even do very well in the near term as well. However, both stocks still appear somewhat expensive. Therefore, I am currently rating Joby and Archer as moderate initial buys here, but I think that if Archer dips back into the $7 to $8 zone, and if Joby decreases to the $12 to $14 zone, that would create even a better buying opportunities, possibly making these stocks even strong buys as we advance from those price points. Thank you very much for watching my profit report. I truly hope that you enjoyed it. And more importantly, I hope that the knowledge you gain here helps you make more informed investment decisions in the future. I would also greatly appreciate hearing your comments, so please join the conversation in the comments section below. If you enjoyed my video, please click like, share, and subscribe to my channel so I can continue creating these highly informative and potentially very profitable videos for you. You can also join the Financial Profit, my exclusive investment community, which is seeking Alpha's #1 service for proven portfolio profits. So don't hesitate to join our incredible investment community now. Thank you very much for watching. See you next time, and have a wonderful day.